Hang on, Donald Trump doesn't pay taxes? Alright, this is Brian Crawford with New Mexico Dream House at Keller Williams, and I have to do the obligatory disclaimer. I am not a CPA, nor am I a political scientist, nor is this a political statement about Donald Trump. I understand that we haven't actually seen his tax statements, so for those of you who are going to blow up the comment section with, I'm sure he did pay taxes and it was a carryover and all this stuff, none of that really matters. I want to talk about why it's possible that the President of the United States, who is a billionaire, doesn't pay taxes. It's a couple things. The first one is we all know that he made his billions in real estate. So real estate tax deductions are very common. In fact, with my rental properties, if I buy a tool or something like that I'm going to use to fix my rental property, I was going to spend that money probably anyway, but now it becomes a business-related expense and I deduct that from my taxes. The other thing that we do is I have vehicles that we own, and if we're doing something that's rental related or flip related, we track our mileage and we do a mileage deduction. Right now, as of this morning, the federal guideline is a 58 cents per mile deduction. In addition to that, my companies own vehicles as well, so we end up depreciating those. So the first one is legal real estate deductions. Sometimes, for my wife and I, we invest in real estate. So if we go on vacation, we'll actually look at real estate several hours during our vacation. We do that not only because we want to diversify our real estate portfolio, but also oftentimes we'll deduct the cost of that trip if we spend more than 50% of our time of a working day looking at real estate. So we'll use that as a deduction looking for more real estate. The other way that you can save money on taxes with real estate are through long-term capital gains. Now, anything under a year, if you hold real estate for under a year, it's considered a short-term capital gain, and typically that's not taxed any differently than your regular income. So if you're making $100,000 a year and you make an additional $40,000 flipping property, or maybe you have rentals, it would be more like flipping property because it's a short-term capital gain, that's taxed as income. Long-term capital gains have a lower capital gains tax rate. So that's a property that you hold for over a year. So real estate investors who hold a lot of real estate will typically hold those properties for well over a year. Like if you have a hotel or a casino or apartment buildings or residential property, those can all be sold with long-term capital gains as opposed to short-term capital gains. And there's a few charts that you can look at. I'm not going to put those in the video. I might link to them below. The other opportunity that you have as a real estate investor is depreciation. So residential properties can be depreciated over the course of 27 and a half years. Commercial properties, that's 39 years. Now this isn't the real property, this is the improvement. So if you take the land and you sever its value from the building that's on top of it, you take that building, the value of the building by itself, and you divide that, if it's residential, by 27 and a half years. So if it's a $100,000 property, for example, and you take a 27 and a half year deduction using what's called the modified accelerated cost recovery system, you can actually take about $2,700 and take that against your rental income. So at the end of the year, you may actually make positive cash flow, but on your W-2, because you've depreciated the property, you've actually shown a loss on those taxes. So that's not taxable income all of a sudden. The other thing that you have to worry about with depreciation is the recapture of that depreciation. So when you go to sell that property, you have to recapture, my understanding is about 25% of what you have depreciated altogether. Now, that's even if you take a loss. So that's something you'll want to talk to a CPA about, and you'll want to talk to somebody about some long-term tax strategy planning. The other way that multimillionaires and billionaires actually avoid paying taxes, and you can avoid paying taxes, is through a 1031 exchange. So if you've held a property for a long time and you've decided, hey, I don't want this single family home anymore, I'd rather transition to apartments or fourplexes or something like that, you can take your profits, roll them into another property through a 1031 exchange. 1031 exchanges are complicated. Don't do them by yourself. Talk to a 1031 exchange expert. Your CPA should be able to help you find somebody who can do a 1031 exchange, if not themselves. So that's something to look at. So let's say you have a residential property that's worth $100,000 that you only have $70,000 invested in because you've gained value over time, but you've depreciated 10 years of that property. If you roll that into, let's say it's a fourplex that's worth $400,000, all of a sudden you avoid those capital gains taxes through a 1031 exchange. So all of this is in the US tax code, and it's perfectly legal. And the US tax code is essentially a roadmap that the federal government uses or gives you to avoid taxes, because they want to incentivize you to do things that they want to have done. Building critical infrastructure is one of them. Oil and gas exploration is one for energy independence. Real estate's another one. When this depreciation went away for a short bit, it actually really hurt low-income families because there wasn't enough housing for them. So the government actually put this depreciation schedule in place in order to get millionaires and billionaires to invest in low-income housing. So it's really a gain for everybody. It's a win-win deal. The other thing that you get through real estate investment is potentially you can avoid self-employment tax as well as FICA tax. Again, you'll want to talk to your CPA about this, but you can take a owner's profit and avoid some of that FICA. So your tax rate should be lower. The other thing is a lot of millionaires and billionaires, when they're creating income for themselves and they're not reinvesting to create a larger portfolio, but kind of living off of that, they'll actually refi and take second mortgages on the properties that they have a lot of equity in. They do this to attain cash flow because you don't pay taxes on debt. So they can get a chunk. Let's say you've got a property that's worth $300,000 and you owe $100,000 on it. You can refinance that property for $220,000. Now you've got $120,000 cash that you're not paying taxes on, and foreseeably that property, if you look at the historical trend, will appreciate over time, so you can recapture that wealth. So in reality, there's a good chance that Donald Trump did only pay $750 in taxes. And what do I say about that? Good for him. He's utilizing the US tax code. It's perfectly legal, it's perfectly ethical, and in fact, legislators all over the place have put these loopholes in place to incentivize you to spend money in such a way that will benefit everybody. So, did Donald Trump pay taxes? I don't know. Frankly, I don't care. That's not a mark against him in my record. Again, this is not, or in my opinion, this is not meant to be a political video. It's just a little bit of education. If you want to learn more about real estate investing, please give me a shout. I'd love to help you on the real estate side. If you need a good CPA, give me a shout. I know a few that I could refer you to. If you need somebody to run a 1031 exchange for you, I can send you a few referrals there too. So be happy to help. Give me a call, shoot me an email. It's brian@nmdreamhouse.com. Pretty simple. That's BRYAN@nmdreamhouse.com. Or you can just click below and send me a message. Thanks for watching. I hope you guys have a great time. Hopefully the tax issue isn't really something that you're worried about when it comes to an election. It's kind of goofy. See ya.